Hey guys, welcome back to my channel. How are you all doing? Hope you are having a good week so far. In this video, I want to talk about my analysis for gold. Starting up with the weekly time frame. I work down to 4 hours / hourly time frame. So far in this video, on this weekly candle, we can see that price has strongly moved to the upside. Breaking resistance around the 2007 area, and we can see that price is still quite bullish as well. But towards the end of this week, that's started from yesterday, we can see price retracing to the downside just a bit, given this week here. So it means that sellers have been trying to push price to the downside. I don't think they're going to push price all the way down, but that's still a possibility. And I think there's still strong bias in the market, and I am expecting that eventually price will get into this 2070 area. If we go down to the daily time frame, we can see where today's candle is forming. That we can see that it is a bearish candle that's following the sort of small tweezer top candle, where we have this very small body and this long wick on both sides. And you can see that there was a battle between buyers and sellers there, but eventually buyers won, but seem to have exhausted themselves. Then you can see sellers pushing price back to the downside, not very strongly, but they're still there. So it could be possible that sellers have exhausted themselves now, and we may see a continuation to the upside from there into this 2070 area, or it may just be that buyers have completely exhausted themselves and price moves back down to this resistance on support around the 2007 area. So it's either that or price moves to the upside. Okay, so these are the two possibilities so far. So but looking at the overall direction of price, I am expecting price to continue bullish to the 2070 area, and I will show you how I will be taking that bullish trade. So on the 4-hour time frame, we can see price ranging here, following this impulsive move. You can see ranging from this sort of downward channel. So one of two things can happen: either price continue to range and then breaking this sort of flag pattern to the upside, entering into the zone that we expect it to, or price may break that pattern all the way back down to the 2007 area. So these are the two possibilities I am looking at. Now to trade this, I'll move down to the hourly time frame, and what I'm going to do, knowing that following this impulsive move, you have this sort of break where you have this retracement, which always happens really when you have a massive move to the upside. Now, if we use our Fibonacci retracement, we can see from swing high low to the swing high, we can see that price has already reached this 50% Fibonacci level here. Okay, and which is a key area, and then price reacting to that area. There is that possibility that price could retrace up and then come back down to this zone here, which coincidentally falls on the 61.8% Fibonacci ratio, which is the golden ratio, before going to the upside, right? So because I'm quite conservative in the way that I trade, the way I am going to trade this setup will be one of two ways. Okay, so if I'm expecting price to go to the upside, that gives me a buy signal, I would only take that on the break of this range here, of this descending rectangular shape that we can see. And the way I'm going to do is I'm going to wait for price to break through this range, as well as break through this resistance area here that has been tested here, right, and here. Right, so once price breaks through this range, okay, there, comes back this, if it goes back here and breaks through, rather than entering immediately following the break, I would wait for price to break this resistance here as well, possibly come back to retest it. If it gives me a buy signal there, then I take my buy trade into this zone. Okay, so that is how I am going to trade the up move that comes next, and then I will be looking at say about almost 200 pips on that move, risking just about, say, maybe 60 pips on that move. So not a bad move at all, a very good risk to reward ratio, and that's how I'm going to take my buy trades. On the other hand, if price does break to the downside and continue downwards, breaking this channel, I wouldn't take any buy trades until price gets down into this 2007 area, and then I'll look for my buy trades there and take it to the upside. So either way, I am looking for buy trades, and either I take it from this 2050 area, or I take it from the 2007 area, depending on where price gets to. But at the end of the day, it will still be the goal will still be to get price to the 2070 area, and that's how I'm going to trade gold. So it may not happen tomorrow, it may happen this next week or next 2 weeks, but this is the move that I'm looking at. If we are fortunate enough to have price break this range and this resistance level as well, then this is the first trade that I will take. And if not, and price continues to move to the downside, then I will take my buy trade from down here. So this is what I'm looking at for gold this week. I will put out another analysis video over the weekend, and then after that I will talk about more analysis on gold on the weekend as well. So thank you very much for watching, and have a great week ahead. Peace.
You know just what you do to me. Play my emotions like a pair of puppet strings.